Welcome to your Tuesday market briefing. We're seeing a rebound in U.S. equities today, recovering some of yesterday's losses. Investors appear to be reacting positively to new economic data and parsing the latest Federal Reserve insights. Let's delve into the details. Looking at the major U.S. stock indices, the S&P 500 closed at 5,685.72, up approximately 0.63% from yesterday's close. The index is showing strength across multiple sectors. The Nasdaq finished the day at 17,955.48, an increase of about 0.62%. Technology stocks are contributing to this positive momentum. The Dow Jones ended the session at 41,388.15, up by a solid 0.41%. The Dow is also participating in today's broad market recovery. The rebound across major indices suggests that yesterday's pullback was likely a temporary pause, with underlying positive sentiment still present in the market. I'd rank this as a Level 2 impact event. Turning to some key individual stocks, Apple closed at $202.15, up by approximately 1.64%. Apple is recovering some of yesterday's losses, potentially finding support after its recent dip. Tesla finished at $285.93, up by about 2.02%. Tesla is also showing a strong recovery today, contributing to the growth stock rally. The solid gains in both Apple and Tesla indicate renewed investor confidence in these influential stocks after yesterday's declines. I'd rank this as a Level 2 impact event. Shifting to the cryptocurrency market, Bitcoin is trading around $95,830.5, up by approximately 1.41% from yesterday. Bitcoin is showing positive momentum today, recovering some of its recent consolidation. Ethereum is currently at $1,865.20, up by approximately 1.93%. Ethereum is outperforming Bitcoin today, showing significant upward movement. The cryptocurrency market is showing a generally positive trend today, with both Bitcoin and Ethereum gaining ground. I'd consider this a Level 1 impact event. Now let's look at some key U.S. economic data. The most recent weekly initial jobless claims for the week ending May 3, 2025, showed 238,000 initial jobless claims. This is a decrease from the previous week's revised figure of 243,000, suggesting the labor market remains relatively stable. Continuing jobless claims for the week ending April 26, 2025, were 1,855,000, a slight decrease from the previous week. The Consumer Price Index, or CPI, data for April 2025 was released today. The headline CPI increased by 0.3% month-over-month and 3.2% year-over-year, slightly higher than some economists expected. Core CPI, excluding food and energy, also rose by 0.3% month-over-month and 3.0% year-over-year. These figures suggest that inflationary pressures persist, although the pace of increase is not accelerating significantly. There were no major Federal Reserve rate decisions today. However, the minutes from the last FOMC meeting, held in March, were released this afternoon. The minutes indicated that Fed officials remain concerned about persistent inflation and are prepared to maintain the current restrictive monetary policy stance for longer if necessary. The discussion highlighted a divergence of views regarding the timing and magnitude of potential future rate cuts, with some members emphasizing the need for more convincing evidence that inflation is sustainably moving towards the 2% target. Today's CPI data showing persistent inflation and the cautious tone reflected in the Federal Reserve minutes are significant. These factors reinforce the likelihood of the Fed maintaining higher interest rates for longer, which has implications for borrowing costs, economic growth, and market valuations. I'd rank this as a Level 3 impact event. Finally, let's touch on the top 3 business and financial news headlines today. First, stocks recover as investors digest inflation data and Fed minutes. This is a Level 3 impact event, as the market's reaction to this information sets the tone for future trading. Second, oil prices surge on renewed supply concerns. This is a level 2 impact event, potentially adding to inflationary pressures and impacting energy sector stocks. Third, tech sector leads market rebound. This is a level 2 impact event, highlighting the continued influence of technology stocks on overall market performance. Today, President Trump held a press briefing where he announced the imposition of new tariffs on steel and aluminum imports from several key trading partners, citing national security concerns. He also reiterated his administration's commitment to deregulation across various sectors, particularly in energy and finance. Additionally, he hinted at upcoming tax cuts aimed at boosting domestic manufacturing. The president's comments on trade immediately triggered concerns about potential retaliatory measures from affected countries, leading to volatility in related sectors. The emphasis on deregulation and tax cuts, however, was seen positively by some market participants, particularly in the energy and industrial sectors. The overall market reaction was mixed, with initial declines in trade-sensitive areas offset by gains in sectors expected to benefit from deregulation and tax incentives. This is a level 3 impact event. That's your market briefing for Tuesday. We saw a recovery in equities today, but the persistent inflation data, the Fed's cautious stance as revealed in the latest minutes, and the president's trade and economic policy announcements continue to be key factors influencing market sentiment. Investors will likely remain focused on upcoming economic data and any further signals from the Federal Reserve and the White House. Join us again tomorrow for more market insights.